Guys, welcome back to DCA. What we're going to do today is talk about using statistical modeling in order to come up with a method so that we can predict when a market cycle peak or bottom might be in place, and how you can use something like this in order to dollar cost average into and out of the market. So we can start here by looking at the premise that this is the price of Bitcoin in blue, and in green is the price of Bitcoin over the 400-day moving average. So you can see that over time, the extension of Bitcoin from its 400-day moving average, or any long-term moving average for that matter, is decreased. So this was the first peak in 2013, the second peak in 2013. This is 2017 peak, and this is the peak in April. So you can see one consistent factor is the returns have been decreasing over time, which is what we expect. What we need to do if we're going to come up with a model which will help us to analyze where we might be at in a market cycle, we need to control for diminishing marginal return. It will help us to analyze where that might be occurring as time goes on. So we actually do this in two different ways. There's a lot of factors that go into the model, but some of the ones that are, easily discussed are this concept of using the moving averages and diminishing returns with time, which we've seen in each market cycle. So if we go over to the Bitcoin chart, we can look at something else. I've calculated these regression bands taking into account the diminishing returns over time. So you can see that as time goes on, we also extend in percentage terms from the regression band less over time. So essentially see here that as we extend above the regression bands and extend down into them, these tend to be the most optimum times to be buying Bitcoin. If you get below the lowest margin of the regression band, these have historically been the best time to buy Bitcoin. So we'll go back to the charts now. Okay, so again, here we are. On the blue line, we have the Bitcoin price, and in red is the DCA index model. Guys, you can see that as we approach a market cycle top at any given time, we approach this level 1 band. And then, so this scale goes from 0 to 1. And you can see that when you're at around 0.5, you're somewhere in between typically one of these market cycle peaks. Now, when you get down towards levels of 0, as the model approaches 0, these are historically the absolute best time to be DCAing into Bitcoin. So you would want to be DCAing most heavily at these times. Remember, guys, smart money isn't buying in when you're in this 0.6 to 0.8 band level. They're buying in when you're in this 0.20 range, this 0.3 to 0 range. You want to be smart money, not dumb money. You don't want to be, it's not to say you can't be buying in at these levels, but typically, if you look, once you start to approach above around 0.7, the market cycle is usually coming to an end fairly soon. And so you're limiting your profits if you're not buying in until these levels. So you can see that essentially you could use something like this then in order to DCA in or out. So as you extend from 0.5 closer to 1, you'd want to be slowly selling your stacks and maybe moving into altcoins. And then as you're approaching from 0.5 to 0, you'd want to be, well, hopefully you wouldn't have your altcoins anymore, but if you did, I don't know, it might be just best to hang on for the ride. With, let's say, free cash, you would want to be DCing that into Bitcoin. Because remember, and I say that about altcoins specifically because as Bitcoin begins to bleed, altcoins are going to hemorrhage, right? We see it over and over again. Bitcoin is your hedge against risk as far as the crypto market goes. So if you have altcoins and Bitcoin's down here at a 0.5 and, heading down, you're going to get wrecked with altcoin. Because if Bitcoin goes down, 50 or 60%, your altcoins are going to go down 80 or 90% or more. Cardano is a perfect example of that, where we saw, not so much in this most recent dip, but if you go back to 2017, Cardano got absolutely wrecked, where it went from, low $1 range down to 2 cents. So the best way to manage something like this is as your Bitcoin is starting to move above this 0.7 level, here into the 0.8, 0.9 and above, you should be DCAing out of your Bitcoin and taking positions in altcoin. From there, then you can start selling those altcoins as you're watching this scale getting closer to 1. You'll know that you're approaching the market cycle peak, and then you can start getting out of the altcoins as well. So that's sort of the way that you can maximize your profit, because the market cycles are it's almost formulaic. Bitcoin goes up, once it holds above the 20-week moving average. We've been talking about that since I started the channel, is we wanted to see ourselves hold the 20-week moving average. I've made 3 or 4 videos on it now. We held the 20-week, and we held it for several weeks, which is absolute strongest. It's how every single bull market for Bitcoin has started so far. It goes above the 20-week moving average, holds it as support. Once it's held as support, then the rally can begin. So I think that's a really strong sign. And if you look right now, guys, we're at around 0.5. So you could still be DCAing in right now. And as we go up, as we start getting to around the 0.7, 0.8, once we're reaching around those levels, you would start selling your Bitcoin, because Bitcoin's not going to get you the big gain. The altcoins are going to do that. But Bitcoin, if you want to maximize your profits, you go into Bitcoin, and then you start to move out as the market cycle progresses, as we get closer to a market cycle peak. So we'll see where we're at, but it's looking like the fact that we've held this 20-week moving average and held it as support, historically speaking, that's a great sign. And we're in prime position right now. We're right at around 0.5. So you can ride Bitcoin until we start getting into these levels here, and then selling your profits, moving into altcoin positions. And then as we approach 1, then getting out of your altcoin and, going into cash, and then waiting until you start to get back down to these levels. And then you can start DCing back into the market. So that's how I'm personally approaching it. And, I think it's essentially how you should always approach a market. It doesn't have to be this model, but having some sort of algorithmic plan in place rather than just, going blindly into the markets. So people have asked me where these charts are coming from. These are MATLAB charts. They're created in MATLAB. So it's software you have to pay for, unfortunately. But if you have the opportunity to get it at a discount, I would highly recommend it. It's, pretty strong data analysis software. You can do a lot with it. Nonetheless, so this is the model, the same thing we just looked at, but, so we're looking at the price of Bitcoin. And then I've placed the DCA index directly on top, color coded. So you can see as we approach these market cycle peak, we're approaching the extreme yellow. And as we're reaching a bottom, we're headed towards these darker bluish purple levels. And it's basically just a different way to graphically represent, where you're at in the market, and just shows you as you're reaching these higher levels, as you're reaching 1, this is when you'll be DCAing out. And then, as you come down, you're DCAing back in, and, like I said, moving into altcoins. And then as you're reaching the most extreme levels, then you're even selling the altcoin, because once it comes crashing down, you don't want to be left holding the bag that you bought from someone, right before the market crashed. So I think with, something like this, guys, you can really improve the way that you approach the market if you have a strategy like this, because it helps you to think more like a smart money investor. Having something that's telling you, here comes the market cycle bottom, and you need to alter here comes the market cycle bottom and you should be DCAing in heavily, or here comes the market cycle peak and now you should be starting to think about getting out of the market. So just having a plan like this, guys, I think can really benefit you. So that's about it for today, guys. If you guys like this type of content, hit the like and subscribe button. And as usual, I really appreciate you guys. Until next time, see ya.